Welcome everyone, and thank you to joining us for our special online event where Hort Innovation will be launching the 21-22 Horticulture Statistics Handbook. The Horticulture Statistics Handbook is the leading resource for horticulture statistics, and the launch of this edition marks the 8th annual publication for the Hort Stats Handbook. So this is a really exciting time of year, and all of us are able to reflect and look back on the last 12 months and look at our understanding of the sector over this time. So thank you so much for joining, and I look forward to spending the next hour or so with you. Before we get started, just some quick housekeeping for you all. Number one, please ask questions. I encourage that, and you do so by interacting with the Q&A function at the bottom of your screen. We'll address questions at the end, so please keep them coming, and then Martin and I will have a section at the end where we can come back to those. Secondly, we can't see or hear you as well, so please appreciate that. And thirdly, the webinar will be recorded and posted online for future reference and training purposes. My name is Lucy Noble, and I am the Industry Analyst at Hort Innovation. The Data and Insights team manage the delivery of the handbook with the support of specialist food market researchers and Logic. And I'm pleased today to be joined by Martin Kneebone, Director at Fresh Logic, who's on the line. So Martin, would you please be able to introduce yourself?
Thanks, Lucy. I'm Managing Director of Fresh Logic. We're a Melbourne-based specialist fresh food market information and insights provider. We work across a number of categories, but we have our deepest expertise in fruit and veg, and we're very pleased to partner with Hort Innovation to produce the Hort Stats Handbook.
Thank you, Martin. And before I get into the overview of the webinar and what we're going to be going through today, I'm just going to throw over to Brett Fifield, who should be on the line, just to do an introduction to the handbook. Brett, are you there with us?
Thank you, Lucy. I am. Can you hear me?
I can hear you all well and good.
Excellent. Thank you. And thank you to everyone who's joining us today for the launch of this year's Hort Stats Handbook. And this is part of a key priority for Hort Innovation and how we deliver information and data for the industry to make informed decisions, not only about their operations today, but also mapping trends into the future. So I'd like to acknowledge that this is a project that is geared towards our sector and delivering information. And we're making all of what you hear today accessible and available online after the seminar. I'd also like to acknowledge that this year the general trend is up. And over the next 30 minutes or so, you're going to hear from both Martin and Lucy about how horticulture performed during 21 and 22, and importantly, some key insights for the sector. However, the beauty is in all the detail, and we'll be making that available, as I said, online very shortly. So we are always open to feedback and our Hort Innovation, any way we can improve our connection with growers, how we can improve the delivery of this information. We try to continually improve on both those fronts. So I'd like to acknowledge Martin and Lucy and the whole Hort Innovation team right across our teams in sustainability, productivity, trade, marketing, and biosecurity, just to name a few, and their input. So what you're seeing is a huge team effort from Team Hort for the whole sector. Thanks, Lucy.
Thanks for that, Brett. And I think that message will be reiterated multiple times today. This is an incredibly collaborative piece because we have a very diverse and broad industry that we're working in. And so it really does take an entire team or multiple teams at that. So just as a bit of an overview of what we're going to be doing today and how we're going to break this webinar down is we're going to break it down into two main parts. The first part will be looking at some perspectives in terms of the handbook resource itself. So looking at the origins, the methodology and refinements, and that ongoing improvement that Martin referred to over the last 8 publications. And Martin will be leading us through a lot of that discussion. The second part will provide a deep dive into the data and associated insights that were recorded for the 21-22 financial year, as well as some broader trend analysis for the entire time series of data, given that we do now have that really robust and exciting amount of data that we can rely on over this piece of work as well. So that will form the second part of our discussion, and we should have then time at the end to round out the discussion with some questions, as I said earlier. So I do encourage you to all interact with the Q&A function at the bottom of the web browser throughout the webinar as well. And finally, I just wanted to remind everyone that this is the launch of the Horticulture Statistics Handbook for the financial year 21-22. And the handbook itself, as Brett said, can be found through the Hort Innovation website or by searching for Horticulture Statistics Handbook through your web browser. And so Martin and I today will be exploring a lot of the data and going into a lot of the insights and key insights that we've gained from this year's handbook. However, this is an incredibly in-depth resource, and so we'll only be able to get into a fraction today of what it has to offer. So I highly encourage you to seek out the handbook and utilise the resource to its full capacity. So with all of that being said, let's get into the first part of this session, looking at the methodology and handbook resource itself. So this edition, as we said, is the 8th publication, which is a sign of the ongoing value that Hort Innovation has invested in this handbook in partnership with Fresh Logic. Hort Innovation originally invested in the handbook to plug a gap in the provision of reliable and trusted statistics for the sector. The value that the handbook served essentially was one of 3 purposes. Firstly, it was to reconcile disjointed and incomplete information. And as I said earlier, it's a real challenge in this sector, given that there are so many different commodities that we cover. And in the handbook, we break it down into 4 main categories, that being vegetable, fruit, nut, and amenity or green life. Secondly, it's a real opportunity to represent the sector collectively. And finally, the handbook looked to, and it has now served its purpose, which is tracking trends over a period of time. So part of the success and a real joy of working on this project is that the handbook is a really unique methodology, and there's a comprehensive approach that is taken to compile all of the information today. So now is probably a good time to bring Martin Kneebone into the discussion to learn a little bit about the approach, the methods used by Fresh Logic to compile the handbook. So I'll pass it over to you, Martin.
Thanks, Lucy. Okay, so the anchor for what we do is what we call a through chain. And we don't do that for reasons of just trying to put a tag on it. We do it because functionally, in this particular market, with this amount of categories, unless you have a number of data points that you can reconcile with, you're at risk of inaccuracy. So we seek to set out to map the production and the flow of the 70 categories as far as we can down the supply chain, in most cases through to distribution channels, deriving the volume and the value and using that perspective to align and test for accuracy as we go. So when we say through chain, it's because that gives us a complete view of how the product travels through the chain, and it also gives us the mechanisms to test and validate that what we're seeing in production and export and maybe going to processing and what might be coming in imports is showing up in the distribution channels and with retail, or we've got other systems that take that all the way through to households. So it's a system that's designed to capture it all and look through it and add it up. And I don't think there's another way. I think the Australian market is a contained market. We're fortunate in that we can produce 95% of what we consume. And when there are impacts on production, there are quite big changes in the rest of the supply chain, and you need to have good information coming in to validate and calculate those things. So as we do that, we enjoy the fact that we touch and contact and share levels of information with players all up and down the supply chain. And that is the essence of how we add up what we have. Does that make sense, Lucy?
Yeah, it does to me, Martin. And I think that's, to me, having worked on this project now for some period of time, the value in it is the amount of touch points with the industry throughout the entire supply chain, right from production through to our industry bodies and then through to the food service and retail channels as well, which is a really impressive combination and compilation of insights that you've been able to draw on as well. So Martin, can you explain now, looking at this, given that this is the 8th publication of the handbook, how has the handbook evolved over time and what ongoing improvements have been added in this latest edition of the handbook? Because I think that's a really exciting development this year as well.
Well, over 8 years, and when we look back, it's gone pretty quickly. We've sought to just improve it. Brett alluded to this, in that continuous improvement is what keeps these things current. And we've sought to embrace that, and partnering with Hort Innovation, they've been pretty receptive to making it better, improving it where possible, including more detail. So we started off producing a PDF format, which was downloadable. We then, with our other expertise around information, it was pretty clear that the user was going towards an online format, and we introduced that in 2018. We then sought to add more lower level domestic market detail and distributions by adding the breakup of retail and food service channels. We took the online to another level in 21 when there was a greater level of analysis possible. And then this most recent one, we've tuned up the PDF document to make it clearer and easier to read, and we've added in protected cropping and state-based production. I'm sure there's more we could do, but I don't want to talk to my team about doing more right now after this one, because all of that, and particularly this last one, has been some of the most challenging. Unless you keep improving these things, I think they can rest back on their laurels, and that's sort of not our approach to it. So that's what's got us where we are.
Yeah, absolutely. And I think what this highlights as well, that the functionality over time has increased and expanded, but also what has been invested in, and I think that's really clear here, is the usability of the handbook as well, Martin.
Yeah.
And so although it's a rather small edition, I think the improvements and the upgrades to the design of the overall PDF is something that's really evident and adds a lot of value to be able to use the resource, because I know that it is one that's used by a lot of different industries, by a lot of different stakeholders and people across the supply chain. So I think that's been a really valuable addition in this year.
Yes, I agree. It's always comforting to see the large majority of the industries embracing this as the benchmark for calculating their return on R&D investments, and that's a good thing.
Yeah, absolutely. So now, with that understanding in the bag, let's move on to part 2 of this session, where we will explore the results and what has come out of the 21-22 period, as well as understanding some trends over the short and long term and what we've been observing. In particular, I thought it would be best to start by considering some of those longer term perspectives, given we do now have that 10 years of time series data at our fingertips with the release of this latest handbook. That will shape then some of the considerations for where to from here, as well as looking at the 21-22 performance. And then we'll round off the session with looking at some of our food service indicators. So what we're seeing here is that production in value terms continue to show positive signs, reaching $15.62 billion in the 22 financial year, which was $381 million more than that of the year before at $15.24 billion. So this is what Brett referred to earlier in terms of when we're looking at that growth in the industry over the last financial year. So what we can see here as we look at the long-term production is that it's clear horticulture has been enjoying a relatively strong period of growth over that last 10 years. Over that period of time, the average annual growth rate has sat in the vicinity of 6% in value terms, which, given the last 3 years of marked disturbance in international markets, supply chain disruptions and extreme weather conditions, particularly within some of our key growing regions over this period of time, it's a promising indicator of the overall health and outlook for the sector. Again, this year we have been enjoying value growth. However, that's not to understate that performance has been certainly mixed over this period of time, and some of the industries have had it incredibly tough, and that isn't necessarily reflecting the fact that production values have still gone up over this period of time as well. So I think that's an important comment to make at the start here as well. When we look at volume, there was a slight dip from last year, down 94,000 tonnes to 6.55 million tonnes. However, this was slightly higher than 2 years ago. As I just alluded, the gross contribution to the reduced production volume came predominantly from our vegetable industry. Note that when we talk about volume, we're not including green life or amenity in this category, and so it's not reflected in those volume measures. When we look at those 4 main categories compared to last year, what we're seeing is that fruit value dropped 4.1% to $5.52 billion, while vegetable production value was for the first time greater than fruit, which is quite a large headline, increasing significantly by 12.9% to $5.54 billion. Nuts had a stronger year too, regaining a lot of the value lost last year, gaining almost 16% or $191 million to reach $1.39 billion. The amenity category, which contains nursery, turf and cut flowers, dropped 6% on the previous financial year to $3.17 billion. So what we can see through the time series data collected in the handbook is that all categories have grown in value since 2012-13, with a compound average growth rate of 5.7%. And as I said earlier, the last 3 or 4 years have been incredibly affected and a rather complex time in terms of reporting as well. So that's one thing to note when looking at that average growth rate. Just going into a little bit more detail when we do look over those 10 years, in terms of fruit, so as I said, fruit did end the year weaker, falling $237 million on last year. However, evidence here when we look at that long-term growth rate or the long-term trends is that particularly in our fruits that have experienced value declines over the last year, the overall trend still illustrates clear growth. And I think an interesting example of that can be seen in blueberries. So what we see in blueberries is that in volume and value terms, production has tripled over the last 10 years with a farm gate production value of just over $400 million in the most recent release. The nature and maturity of the berry industry is incredibly different to that of citrus, but what we see in citrus is also a compelling story where the value of the citrus industry more than doubled over the same period of time, while volume increased, but to a lesser extent. Some other standout performers over the period of time that we've been reporting in the handbook include lychees, which are nearly 4 times greater value than 2012-13, so one of our smaller industries. Rubus, so raspberries and blackberries, nearly tripled in value over that time. Nashi increased 2.8 times, table grapes 2.5, and lemons and limes tripled in value over that period of time as well. For vegetables, what you can see and what I just said is that vegetables for the first time have overtaken fruit in terms of production value. And generally what we're seeing is that across the board, the vegetable category has performed very well in terms of value, particularly for head lettuce where production value increased by 55%, leafy salad vegetables increased 19%, and tomatoes increased by 15%. Over the handbook reporting period, the vegetable category has seen growth over all products, but production value has more than doubled for garlic, leeks, sweet corn, herbs, and head lettuce over this period of time. In nuts, the category had a positive year with almonds, pistachios, walnuts, chestnuts, and hazelnuts all seeing gains in production value, which is really promising. Over the 10 years, nuts have more than doubled in value, going from $639 million to $1.39 billion in this latest reporting period. Some outstanding headlines in nuts have been in almonds, which have increased by a factor of 2.5 in terms of value, growing from $373 million to $916 million. Hazelnuts, whilst a smaller commodity, have grown over 7 times from 0.7 million to 5.2 million in the latest reporting period. And also pistachios, which have tripled in value, and also macadamias, which have almost doubled over that same period of time. In our amenity sector, the value of this sector has come back 6% in the latest reporting period. However, the amenity sector has increased by 88%, which is nearly doubling from $1.68 billion in 2012-2013 to $3.17 billion over the 9 years. Martin, having gone through all of that, and that is a little bit of an overview, but is there anything that stands out to you in terms of production trends that we're seeing over the 10 years?
I think we're seeing more informed decisions about what people are producing, and we're seeing greater information uptake in some of the bigger decisions. We're seeing in some areas some crops being expanded as an alternative to others. The more successful nuts particularly have been planted in areas that might have been areas where other things were produced. And in general, I think increased uses of protected cropping. We'll talk about more about that later, and that people are now have a better understanding of the latest methods, the markets that they're targeting, the volumes that they want to produce and how they want to service it, and they're investing more to assure that they do that. I think we've seen more specialization by producers, being better and deeper at a narrow range of categories rather than a broader one, particularly across vegetables. And I think that we're seeing degrees, quite a lot of investment back up the chain from informed middle market enterprises. Again, I think the information uptake of those in the middle of the market who historically have to look both ways at demand and supply means they're pretty informed. And in a lot of cases, we've seen a top tier evolution of players, and those players are investing further back up in production. So if there's a common denominator in all of that, it's people getting more informed and using it. We're outputting more. We're more measured about where we invest. And I think we've got a better view of the markets we're servicing and how to make the grades of product that those markets will pay for.
Yeah, absolutely. And I think that probably provides a bit of a good segue when we talk about markets we're servicing and looking at our exports as well, because that is a particularly important part of the production value growth over the reporting period as well.
Yeah.
So when we do look at exports totaled 2.47 billion in the last reporting year. Yep. So while increasing on last year, the 21-22 export value remained less than the highs of 2018-19, which was 2.69 billion, and 10% less than 2019-20 at 2.75 billion dollars. So why is it down in value? It's an incredibly complex answer, and I think there's a lot that comes into this, but a large one would have to be COVID and the trade freight disruptions that have been seen not just across the horticultural or agricultural industry over that period of time, very challenging market conditions, and then some industry-specific impacts on world prices, such as what we're seeing potentially in almonds and oranges as an example. However, what is clear is that exports are a completely fundamental channel in the horticultural industry, particularly when we look at the growth. So exports in horticulture now make up 11.53% in terms of the total volume of horticulture. And so when we look at the growth that's been seen in the value of the industry over the last 10 years, it's incredibly clear that exports have played one of the biggest, if not the biggest role in the growth of the horticultural industry over that period of time. So in terms of looking at the four categories, and value terms went up for all apart from veg, with the largest gains in nuts, which went up $105 million or 12%, driven by almonds, which were up $78 million, with fruits being driving an increase in mandarins in particular, which increased $36 million, which were up 25%, and also avocados, which were up $30 million, which is remarkably up 136% on the previous year. However, I guess it's also definitely worth noting that there were also some significant drops in respects to the value of fruit exports, with oranges down $25 million or 9%, and table grapes down $21 million or 5%. Despite the declines, though, table grapes and oranges remain the two highest valued fruit exports, representing a combined total of 57% of the fruit export value. I guess the two of the biggest fruit industries in terms of proportion of export value have both doubled in value over the time series. So that being oranges, which are up 100% since when we started reporting in 2012, 2013, and table grapes up 144%. So putting the kind of changes that we've seen over the last financial year in perspective and relative to the entire time series of what we've been reporting. Similar for veg as in fruits, carrots account for just under 40% of the total value of vegetable exports. So there is a high degree of concentration of those more mature export-facing industries. Having said that, we did see some growth in some of the smaller industries over the last reporting period, and that might not have much influence in terms of the overall headline figures for export. However, it's still an incredibly impressive result. For instance, when we look at something like celery, which has increased the export value 7-fold over the reporting period and reporting period since 2012-2013. Brussels sprouts have increased by a factor of 6, and sweet potatoes nearly 6 times their export value in 2012-2013. Some other notable mentions for leafy salad veg, tomatoes, mushrooms, and English spinach have all doubled their export value over this period of time as well, with carrots, which, as I said, make up a large percentage of the export value of vegetables, up 1.8 times than what they were in 2012-2013. In 21-22, nuts accounted for the greatest growth in horticultural exports, increasing 12% or $105 million. And this rise in export value was driven generally by almonds, followed by macadamias and other nuts. So without a doubt, when we look at the export kind of field, there's been some serious headwinds in the latest reporting period, with challenges in terms of freight, market conditions, industry-specific volume barriers. However, again, the trend is clear, and the trend is growth, which is evidenced through the 9 compound annual growth rate in the order of 9%, which if you ask anyone involved in agriculture, they will tell you that achieving nearly double-digit growth is really exceptional in terms of growth in the agricultural sector. A lot of work has been done, as Martin said, to build capabilities, and particularly in exports for on-farm and in our domestic market, which serves to ensure that we do grow and supply the market with a product that people do want. And that's what's being shown here. Martin, I think the thing that stands out here is, to me, the significant contribution that exports have played over the last 10 years to the overall increase in the industry has been demonstrated on this previous slide and in here as well. Is there any particular things you want to call out when we look at exports over the last 10 years?
I think the numbers say it all, Lucy, and this is now a huge part of the economic platform of the industry, really. I mean, this is the way that we are doing. We are serious exporters. We are no longer spectators, speculators. We're no longer in and out of markets and telling people, no, we can't because we can get a better price locally. Those days are gone, and we have committed 50-60% of the volume of some of those bigger crops to these markets. And that's a wonderful example for some of the smaller categories that are just starting off on that journey. I mean, we have a unique capacity to produce all that we consume, and with that, we have a unique capacity to produce some particularly temperate fruits and nuts that are that have Southern Hemisphere advantages, and that's mature. The income that the successful exports have enabled is a great deal of investment back into production capacities and also regional communities. That's been a strong injection. I think we've also become better at working together, and which is needed. At times, we're still coordinating outputs from a wide array, wide numbers of growers, and we've got to maintain consistent grades. So we'll always have to keep at that stuff, and we can't let it go. But that's been managed with the big successes, and that's good. That's not easy with Australian agricultural individuals. They've got a wonderful independence that's part of the DNA, and yet we haven't been able to strike a balance between harnessing that independence and getting them to do what they need to do and pulling it all together and succeeding in export. So I think it's great. I think it's a really good story. I've been lucky enough to be involved in horticulture, to watch it go from early 2000s to where it is now, and it's been a wonderful transition, and I think just a platform for more growth in the future. We have a finite market locally. We have population growth that might hover at 1.5%, maybe 2%. That's not going to give us a lot. If we're going to grow our industries and what we do, it's going to be because we are successful at export, and this is a good sign.
Yeah, absolutely. I think we're both fairly clear in that this is really promising for the industry. Been a few really tough years, a lot of complex issues, but generally what we're seeing here in the long term is really positive in terms of export growth.
Yeah, I just come back. You're right. There was challenges with logistics. We know that, but we got through that, and we still got acknowledgement for our product. It wasn't easy, but if anything, it said the work that we'd done in the 5 years prior put us in a strong enough position to maintain some things, which was good.
Yeah, absolutely agree. So now what we're going to move on to is a little bit more in terms of the detail of the year-on-year performance for the sector that characterised the 2022 financial year, and what's reported on in this handbook. So we'll step through each of the categories: fruit, vegetable, nut, and amenities. So before I get into it, and Martin alluded to this before, but obviously there's been continuous improvement in the handbook over all of the publications, and something that's really been invested in and expanded this handbook is the state-based production value volumes, as well as reported planting areas for the relevant commodities as well. So we can't necessarily go into all the detail here today. We only have an hour, but this is something that is very much expanded on in the handbook. So I encourage you to go back through the handbook and refer to these as well, because I think it does illustrate a clearer picture and a lot more detailed picture for a lot of our commodities when we start looking at the state-based production. And very simply, what we can see here is that Victoria accounts for the largest production value, followed by Queensland, New South Wales, and so on. So I encourage everyone to look through the handbook. Both the PDF and the Tableau versions of the handbook have this information in as well. So just wanted to mention that before we start looking to some of these categories. So one thing I just want to reiterate as well is the reporting period that's captured in this handbook for the 21-22 period, because the handbook does cover that July 2021 to June 22, which means that current conditions are not necessarily, or they're not reflected in this year's handbook release. And that's really important to consider, and it's important every year to consider. But I think particularly over this reporting period, given that we've had some incredible, particularly weather events and affected a lot of our commodities, particularly in that vegetable line. And that's one thing to note as well. So we've got 8 months of the last 8 months that haven't been necessarily reported on in the handbook. What we've tried to illustrate here is that across the fruit category, on the left-hand side, we can see that production value share of the various fruit commodity groups, there's a fairly high degree of concentration with the combined berry, citrus, and table grape categories accounting for nearly half of the total production value for fruit. If we then include apples, bananas and avocados, we're looking at nearly 3/4 driving the value of fruit. And then on the right-hand side, what we've got is a breakdown of the fruit products that the handbook reports on, looking at their production value, their change in production value over the latest reporting period, as well as the 5-year compound annual growth rate, and a contrast with the volume change and export value change over the reporting period. Now, I appreciate that whilst this might not be the visually most simple representation of the entire category, I did intentionally want to include this because I think it's really important today, because there'll be a lot of people listening and it represented over across most of these groups. So I thought it was worth at least including the table and for detail. So as we said initially, it has been a weaker year for the fruit category, declining $237 million, with the volume also declining, but very marginally. A decline in the fruit farm gate production value was driven by production value losses, particularly seen or remarkable in avocados, which came back 125 million, bananas decreased 95 million, apples by 51 million, berries, particularly rubus, which came back 22 million, and oranges, which came back 17 million. Having said all of that, several fruit categories did experience stronger values in 21-22, including table grapes, which increased 90 million, watermelons, mangoes increased 17 million, mandarins increased 14, lychees 10 million, and nectarines and peaches by 8 million. So I think one that's worth probably mentioning, and we touched on it earlier, but is table grapes. And almost in light of the decrease in exports this last year, with export value back 10%, I think there is a story of real optimism in there as well. And so while the value of exports reduced at a lesser rate than export volume, which reduced 4%, the fresh domestic market absorbed the increase in supply, with the value of table grapes into that retail channel increasing 40%. So what this all is to say is that despite some very pronounced challenges in trade that we went over earlier, particularly seen for table grapes, the difference in supply of presumably higher value and higher quality product that would have previously been sold at a premium through export was able to be supported and absorbed by some really strong growth in that domestic value channel as well. So I think that is an incredibly encouraging story, and there's been a lot of work in the table grape industry to get those results as well. Moving on to berries, while berry production volumes softened in the latest reporting period for all varieties, so for blueberries, rubus and strawberries, the rate of decline was greater for production volumes than it was for values. The 21-22 farm gate production value per kilogram increased 18% for blueberries, 14% for strawberries and 4% for rubus. So despite the softening production values, blueberry and rubus volumes continue to have the second and third highest 5-year compound annual growth rate behind avocados. So what that really means is that reduced production volumes have resulted in a reduced per capita supply of blueberries, rubus and strawberries, meaning that in practice, berry availability to Australians has been at its lowest level in 4 years. We've touched on this one before as well, but moving on to oranges, orange production volumes recovered 6% on the back of last year's low to reach over 501,000 tonnes in the latest reporting period. And the value of orange production receded slightly to $421 million. Despite this, the total value of oranges has seen it become the 4th highest fruit category behind table grapes, apples and bananas. Over the last 5 years, orange production value has increased by $87 million, averaging 4.8% compound annual growth, while the volume has softened at a lesser rate, 1% over the same period of time. New production value highs were achieved for the 3rd consecutive year for some of our smaller categories, which is really promising, with the production value of persimmons increasing to 17.3%, which is a 56% increase, and custard apples to $8.4 million. A notable one that I mentioned earlier as well is that avocados supply surged 57% on the previous year, on the previous volume, reaching 122,000 tonnes. Avocado exports showed positive signs, increasing to 11.6 thousand tonnes, despite the increase in exports and reduction in import volumes. The production value of avocados, however, did fall 26%. So now looking at our vegetable category, overall vegetable production volume was down 3% in the latest reporting period. However, despite the modest decrease in vegetable volumes, production values reached an all-time high of $5.54 billion, which is an increase of 12.9% on the previous year. So as I said earlier, these were record values for the vegetable industry, and for the first time exceeded the value of the fruit category. So the short story from that illustrates that despite some challenges in volume growth over the reporting period, the value for the most part has continued to rise, which indicates the market is willing to continue to take a higher price for it. And it is really an interesting driver for the overall change in the category. I think an important caveat to mention here as well, and I alluded to it at the start, but even though we've seen some really remarkable production value increase in the vegetable category, that's not to mention that there has been some incredible hardships within the category line, and it's a lot of the reasons as to why we're seeing this increase in growth. So I think the long-term trends within the vegetable line and horticulture in general are positive, but that's not to say that it's a simple story within the vegetable line in particular, and I think that's quite an important one to note. So the decrease in production volumes overall were driven largely by tomatoes, which were back 35,000 tonnes, carrots, which were back 29,000 tonnes, and capsicums, which were back 10,000 tonnes. However, we did see some increases in vegetable production volumes, which were in cabbages, which increased 5,500 tonnes, leafy salad vegetables, which increased nearly 4,000 tonnes, and potatoes, which increased 3,000 tonnes. Just some highlights that I wanted to go over were for potatoes, where volume increased 0.2%, while value over-indexed and increased 2.8%, reaching $830 million, making it the highest value vegetable. Beans also had a really impressive year in terms of value, which was up 64% on the previous year, recording its highest production value at $134 million. Some strong value growth was also seen for our head lettuce commodity, which increased by 94.8 million to reach $267 million, which is the first time exceeding $210 million for head lettuce. Leafy salad vegetables also increased and reached new production volume and value records, with volume increasing 5.3% and production value increasing 19% to reach $589 million. We mentioned carrots before, but carrots, despite easing carrot production volumes, remain the highest value vegetable export, with 32.4% of the Australian grown carrots being exported. And another notable mention is for onions, which saw new production value highs exceeding $248 million. I just wanted to include this slide because I think we can all probably attest that one familiar topic of conversation over the last reporting period was that of increasing cost of lettuce and other household staple vegetables. So quite simply, the latest reporting period covered a really interesting period of time with adverse conditions, which had a crippling effect on the supply of many of our vegetable lines. So in Australia, as I think Martin mentioned a couple of times, we have a relatively contained market, which is fortunate because it means that we can supply ourselves. However, what it does mean is that when we have issues in supply, it is reflected immediately in the value of production. So that the trend that can be seen across head lettuce, tomatoes, onions, and beans has all been a combination of these factors. And I think an important point is that whilst it's a really positive growth story in terms of production value for veg, it has also been an incredibly challenging year for much of the industry, whether that be the swings and roundabouts over COVID, shortage of product as a result of potential flooding in key growing regions, and rampant inflation. It's been an incredibly challenging time for much of the industry, and this trend where we've got reduced volume but an increase in production value is one that can be seen across most of the category line. Martin, did you have anything you wanted to add in at that point?
No, just I think you've summarised it, Lucy, that contained market and the strength of demand, really, as you've alluded to earlier, that's prepared to pay for less of the product, and I guess the efficiency of this marketplace and how it sets prices and captures some value. Clearly, there's been some pretty big disruptions to the capacity to produce and distribute the vegetables. We've got through what we could. It's affected the prices, and we've had some discomfort with some of that, but we've sort of managed through it. We're past that now, and that's what we do. That's what we do in a contained market when we have variations like this.
Yeah, absolutely. So a bit of a step change, moving on to nuts. The overall value of nuts increased by 16% in 21-22, gaining $191 million in value, which is recovering some of the $210 million in losses experienced by nuts in the previous financial year. The rise was largely driven by increases in almond value, which saw the single largest increase in any value commodity, increasing 26.9% or $194.4 million, which is an incredible result in the almond industry. So almond production volume is currently at its highest point on record, and at a lesser rate than value. Volume increased 15.6% on the previous year to reach 205,000 tonnes, that's in shell. The increase in production volume saw almond exports increase only marginally by 1%, while export value over-indexed export volume increases, rising 14%. This is also to mention that where we did see a lot of this increase in value was in the fresh supply channel, which went up 61%. I think an important mention at this point is that some really important investments in the data and insights through Hort Innovation for the almond industry show that the 3,500 hectares of plantings in 2000 represent only 6% of what exists today at an estimated 60,000 hectares. So what this indicates is that we've come and we're going through a really critical time in the almond industry, but this is some really, really promising results in this latest handbook for almonds, and it's an incredible effort on behalf of the whole industry, I think, as well. Also, walnuts volume increased 5% to 14,000 tonnes in the latest reporting period, with production value increasing 19% to reach $49.5 million, and pistachios reached new production volume and value highs, returning $37.5 million. Finally, macadamia production value softened 5% in the latest reporting period, despite production volume reaching its highest levels at 52,000 or nearly 53,000 tonnes there. And moving on finally to our amenity sector or our green life sector, the total value of production for the amenity sector was $3.17 billion in 21-22, which was 204% or 6%, sorry, 204 million or 6% lower than the previous year. In this latest reporting period, making up 81% of the green life category value and the single largest horticultural commodity, nursery value declined 8.4%, which was $234 million in loss. It came back in value to 2.56 billion, which when you look at those numbers, it did drive most of the loss and the decrease in production value in the amenity sector. As well as the nursery commodity, the value of turf also softened on the back of record highs in 2020, 2021, declining 2.6%, which was $8 million, while cut flowers recorded its highest year of production value, increasing 13.5% to reach $315 million. It's worth noting that obviously this category, maybe more than any other, had come through an incredibly tumultuous and complex 3 or 4 years. There's been a shift in a lot of behavioural patterns, a lot more people spending time at home in lockdowns, and placing more value on their green space and their space within the home. So this category has come through an incredibly complex couple of years, and I don't know if we can say we're returning to normalcy. But there's definitely been some marked growth over that period of time, even with the value in our nursery sector coming back slightly over the last reporting period. So I think and Martin alluded to this before, a really exciting addition to this year's HortStats Handbook has been the introduction of protected cropping systems for the relevant industries. So Martin, if I can just call on you to give an overview as to how you and the team have been able to produce the various production system details in this latest handbook, noting again that this is the first time that the handbook has included the protected cropping statistics. And is there anything that stands out to you in these findings?
Thanks, Lucy. Look, the reason for this was that we proposed it because it's just such a big part of horticulture now. The capacity to control the environment, get a better yield, and do a better job of what you're doing is the norm. And so varying levels of protected cropping is touching most crops, if not all. Our challenge initially was what was possible as probably a first step. And we've narrowed that down to say we believe that we could identify glass houses and poly houses and tunnels. There was discussions about can we cover shade cloth and whatever. It was very difficult and in some cases used different ways. So we narrowed it down to those two and have attempted to do that for the products that you can see listed. So how do we do it? Well, we're researchers, really. That's our DNA. So the first job was to gather all the available data, and we're pretty good at that. And we sort of know our way around horticulture, so we did. And then we took that data to our networks, which are producers, and particularly some of the larger input providers who service the growers. With our view of the outputs, we requested their input and provided the sum of the total back to those who shared. Globally also, we were able to draw off good benchmarks for production. So with that as the sort of base method, we then had to make whatever we defined here reconcile with what we're also defining as the market. It had to work in and reconcile with the through chain systems that we use for all these crops. So there was several parameters around what we found and what we defined that I guess guided us through to these sorts of levels. And it was a sum of all those. I'm very keen to get feedback from those participants in these markets about this. I know many of them will be well aware of this because we've had discussions with them about these volumes, and thanks for your help. And I think it will continue to expand. I think varying levels of protected cropping will go beyond the base of vegetables. Will continue to expand across the fruit and berry crops where the investment is high, but we know that the return is there when the yield and the pack out numbers go the right way. Yes, I look forward to feedback, and hopefully all that can only help to help us extend it further and or calibrate degrees of accuracy in what we defined so far.
Yeah, absolutely. And I'm really excited to see this section of the handbook expand. And I think like all parts of this handbook, there is a tried and true method in the compilation, and that is a lot of industry feedback as well. Yeah. So look forward to seeing this expand and gain its robust kind of nature, as has the whole handbook over a period of time. So really a great job from Fresh Logic with the addition of this. So thanks, Martin.
Can I just add one thing to that, Lucy? One of the challenges here was that all of the crops that you can see on that page have got degrees of their production in protected cropping, but they also all have degrees of their production and open conventional. And it's the switch between those two and the balances of that, and in some cases clearly distinguished by the product form that allows it to happen. But that's fluid, and it'll be subject to the vagaries of climatic influence on Australia's production variation. So I suspect that what we are seeing in terms of output from protected cropping could move around a bit as all of those variables come into play.
Yeah, absolutely. So moving towards the end of our presentation here, we've just got some additions in the food service sector, reaching its highest recorded level of volumes, values, while volume reduced 0.2%. So as we mentioned at the start of this session, food service is one of those market channels where there has been a lot of movement over the last 4 years. And without wanting to understate the difficulties that this channel in particular has faced over that period of time, it's been an incredibly valuable resource and very timely to have had this food service fruit and vegetable data available to help us understand how and validate those movements as we've seen fresh produce come through those different channels and move over that period of time. I must mention here as well that at this stage, food service is only reported on for fruit and vegetables within the handbook, and this year marks the 4th year of food service data and 2nd year of publication. So despite this, it does illustrate a really clear recovery for both fruit and vegetables. Over the past year, $1.9 billion, nearly $1.9 billion of fruit and vegetables went into the food service sector, and this was 11% higher than the previous year. Volume-wise, 640,000 tonnes of product went to the food service sector over the last year, which was generally on par with the year before. However, compared to 3 years ago in 2018-19, volumes are still 50,000 below what they were at this period of time. When we look at fruit and veg, they show slightly different stories. Within fruit, 14% of fruit goes to the food service sector. Fresh fruit goes to the food service sector. And the value in this latest reporting period, it fell 2% to $711 million, while volume recovered slightly. In vegetables, slightly more vegetables get sent, fresh vegetables get sent to the food service sector channel. In the latest reporting period, value terms recovered, gaining 11% to reach $1.22 billion and marking a $100 million increase on the 2018-2019 figures. So what we can see here is that the columns show the large contributors to these totals. And for fruit, that's in berries, citrus, avocado, apples, and bananas. And they together represent 70% of fruit heading into that food service sector. Whereas for vegetables, there is less concentration. So the largest 5 categories, which are leafy salad veg, tomatoes, mushrooms, potatoes, and onions, account for only about 53% of the total vegetable value in the food service sector. So underlying once again and pointing to the long-term growth in the food service sector, Martin, can I throw it to you? I'd be really interested to get your thoughts and comments here around what we've seen happen in the food service channel over recent years. And given the return to somewhat normalcy, and I say that tentatively, in the latest reporting period, where does that leave the food service channel?
Look, clearly a challenging period over 4 years. Nothing more final than having your outlet closed and being told that you can't open, and that's what some of these players had to do, and it put a lot of pressure on it, and it flushed out some operators who could cope with that sort of pressure. Those that were resident and operating in CBD areas had to adjust to drastic reductions in their market sizes, and now are still left with ongoing smaller markets because working from home has affected that sort of thing. So big changes where a lot was learnt. Also, don't overlook over that time, the order aggregators, the Ubers and the menu logs evolved, got between the consumers and the restaurants and picked up a lot of margin. So it was a level of pressure that came in there that was untimely given the other pressures they were on, but that's the way the market evolved. There's lots of different parts of food service, and while we do tend to focus on cafes and restaurants because of what we see as consumers, there's an institutional component like health and retirement, which just kept ticking. But conversely, the food that was involved in travel and sort of big sports events and so on virtually closed. So what do we take out of it? we take out of it that food service has evolved. I think that the cafes and restaurants, by far the biggest consumers, have tightened their commercials. They're working with set menus, seating times. I think they've put their prices up in response to some of the inputs in and an objective look at what sort of returns they've got to generate. They're probably doing a tighter job, and it's sort of worked. But the biggest thing we can see is that, particularly in the last 2 quarters of this year, we could see it a little in the last quarter of the year in review, but consumers have hardwired in a lifestyle of eating out. Households are now spending 35 to 38% of their household food budget on eating out, and I don't think that's going to change. I think it's only going to expand. So this is a channel where investment is warranted. It's a good thing to understand. They are commercially orientated players. They are not merely trading in a product. They are picking up a product as an ingredient in a meal assembly process. They're receptive to how that product can add value to that meal. And I think the way that they've come through now is positive. And I think that the strength of demand, particularly given the levels of consumer sentiment and the work that's going on, or let's say the decisions that have gone on with interest rates that have tightened up spending, in that sort of context, with all those things going on, food service has still grown really strongly. So there's an underlying demand there. It mightn't be representing the dominant portion of what we're doing, but it's substantial, and it's worth understanding how your product finds its way through to the food service channels and what it is, what form best suits those players that are going to use it as a meal ingredient.
Yeah, absolutely. There's not much more I can add to that in terms of demonstrating its value, but I think, again, an important point is that we're covering this at a really interesting time in food service and a change in this channel as well. So really curious to see how that performs over the coming years as well.
I agree.
So as we get into the last few minutes, I just wanted to provide a bit of a summary over what we've gone over today, given that there is a lot. And we've tried to take the key insights, but as I said, there is a lot of depth in this resource. So what we can see and what's illustrated here is that in line with supporting the overall vision of the agricultural sector to crack that $100 billion mark by 2030, horticulture plays a really important role in the growth, and we can see here, based off the current trajectory, horticulture, that we're well and truly on track to reach that industry target of $20 billion in production value by 2030. Currently, we're at $15.62 billion with 8 years to go. And if we continue to experience the same growth as what we've had over the last 10 years at a compound annual growth rate of 5.7%, and you won't forget that one now, I've mentioned it a few times, then the projection is that green dotted line, which we can see the industry reach $20 billion by 26-27. On this path, by 2030, the value will be an estimated $24.4 billion. If we look at a linear trend, so that is just drawing a straight line directly through the data and keep going, that's that blue dotted line, and the 20 billion target will be reached in 27-28, and by 2030, value will be at $22 billion. And then to meet the minimum target of $20 billion by 2030, a 3.5% compound annual growth rate is required. I think there is opportunity as well, Martin, and I think you'd probably agree that there is a lot of potential here, and it's a really optimistic story as well. And we've come through a period of incredibly challenging times over the last few years. So that potentially is a modest projection as well. But I think the horticulture industry is in a really solid standing to perform really well over the next 8 years as well. So finally, as a bit of a summary of what we've heard today, I think 4 key main points. One, obviously, is that value has grown in the horticulture industry to $15.6 billion. That's not to say that it has been a simple or an easy or a particularly straightforward period of time over the reporting period. We've had incredibly challenging weather conditions, widespread floods, complex market conditions, which saw mixed performance across all of the categories. Some standout value performers were in table grapes, almonds, head lettuce, and leafy salad vegetables. What we're seeing is the rise in export value, despite softer volume, is playing an particularly important point in the overall production value increase within the horticulture industry. Export value increased for fruit, nuts and green life, but declined for vegetables, which generally follows the decline in volume within the vegetable category that we saw within this most recent reporting period. Value of the food service sector and retail continues to grow, and this is an incredibly changing and diverse channel and distribution channel, but retail value reached its highest record level at $9.34 billion, despite retail volume coming back 3.2%. Long-term growth, we are on track. The horticulture industry is on track to reach that $20 billion by 2030, with promising expansion in several key lines, and it'll be a really interesting one to follow over the next few years. And finally, that strong R&D and marketing investment, as we both alluded to, particularly in the domestic supply of a lot of our commodities, is important in growing that domestic demand, and also the expansion in our trade avenues as well. So that does bring us to our the end of our session today. But Mun, given that I promised that we would ask a question, I might throw over to you just to ask one question that we've got here. Mun, what have you seen as the biggest growth driver over the last 12 months, particularly in some of the categories with the largest increases in production value?
I think recovery of their export capacity, that's been the big driver. And then close to that has been the propensity of the market to pay for modest volumes compared to previous years. So we've got a better price for what we have produced, and we've probably levered off our credibility in export markets to do well there. Fractured logistics, challenges with shipping particularly, but we've still managed to get that up. So in summary, a good job on exports, and probably a strength of demand that's allowed us to get better price for some of the lines that were in short supply. Yeah, absolutely. Well, I think that brings us to the end of our session in the webinar today. I'd like to thank Mun for joining me here on the session, for sharing your insights and perspectives today, as well as the audience around the country for dialing in and your ongoing engagement with the Handbook resource. The Handbook, as I said earlier, is accessible via the Hort Innovation website, and I might add as well that it is mobile friendly. We'll also put a recording of this session online, which will be available via the website and our social media platforms. And we will upload responses to any of the audience questions today that we didn't get time for as well. So thank you again for being with us today. And I hope that you enjoy working with the Horticulture Statistics Handbook across your area of work. Thank you. Thanks, Martin. Thank you. Thanks, Lucy.